Many times when we talk about car short sale, we reference having the loan gap reduced by removing some of the fees and charges from the lien holder. And one of those charges is what's called add-ons or F&I additions. And here's an example of where these have been shown to be illegal or improper. This is a news article publication, a press release from the CFPB, Consumer Finance Protection Bureau. This is a government agency that protects consumers from any kind of financial fraud from institutions. This was a loan company called TitleMax, and they were forced to pay $10 million for unlawful title loans. And if you look at the very end of it, it says fees for useless products. What they did was they tacked on extra fees on top of the loan that made the loan balance higher for consumers. Now, if you audit some of these loans, you'll find that it could be thousands of dollars in extra fees for products that had no tangible value. And in the requirements from the Federal Trade Commission, it's... You will be back in your video in just a few seconds. In the meantime, remember that actualhuman.com offers you live one-on-one private video consultation with an expert in this exact subject. We want to listen to your story. We want to hear your questions. We want to give you expert advisement of your options and tell you what we know about your particular situation. Now back to your video. It says very specifically, you cannot add on fees for things that have no tangible value or practical value. So one of the things to look at in a car short sale or lien mediation is to remove those items or cancel those items from the loan. And many times that can add up to thousands of dollars. So if you have a negative equity on a vehicle that you owe, let's say $30,000 and it's only worth $20,000, if you can chop off $3,000 or $4,000 in fees from the loan, get another $2,000 or $3,000 from getting a resale value rather than a wholesale value, you can maybe get that negative equity within a couple $1,000s or maybe break even so you can get out from underneath your car. Many times the lender will also participate in that negative equity to help either refinance it, to help adjust some of the difference, and sometimes the dealership that sold you the car may have some liability to look at as well. So if you have a vehicle with negative equity, you're upside down in the vehicle, this is one of many methods you can use to reduce that negative equity, get the loan balance closer to the value or maybe even at the value so you can sell your car, trade it in, and get out from underneath that big car payment. Thank you for watching another video at actualhuman.com and describe.tv. Remember, if you have questions or comments about our videos, put them in the link below. Also, remember that you have availability and access to live one-on-one question and answer consultation with a licensed expert in a number of fields: investigations, insurance, surety bonds, civil court mediation, even things like real estate records research, real estate brokers, real estate mortgage lenders. In addition, you're going to find that experts are available in business segments, business development, marketing, advertising, certified licensed experts. So if you do find this content valuable and you want to delve more deeply into a subject, you can't ask YouTube a question, right? But if you want to talk to somebody live, an actual human, use the link below. Thanks for watching.